So yesterday, one of my stocks brought out some amazing preliminary earnings. We're going to go through the earnings because this stock is on fire, and I think this is an absolutely unbelievable opportunity right now, because this stock at the moment, even though I am currently, I think, 50% up on this position, which is a pretty good achievement in this bear market, I think this stock will go back to doing its 52-week highs, and from here I will actually have once again a 400% return on this stock in the next few years, because the company is doing absolutely amazing. And this is a prime example right now, one of those stocks or the businesses where the financials performance is just going up and up and up, and the share price just moves in the right direction, and it's near 52 close at the moment. So yeah, we're going to talk about this one for a while because it's one of my biggest holdings. It's one that I've talked about many times on the channel before, and yeah, after the preliminary earnings that came out yesterday, I just think this is a little bit of a taster when we do have that kind of turnaround in the market. You know, everyone at the moment now is very bearish on the market. You're seeing all the negativity out there, and when that switch is flipped or switched, you know, it's going to be a bit of a change in the direction, and we'll have a bit of a very big rebound in some of these beaten down stocks, and I think this is one of them that will have that rebound. So yeah, without any more time being wasted, we'll take a look at this stock. And this stock is InMode. So you guys that are here regular, you'll know this company. I've talked about it a few times. The ticker symbol is INMD. It's a bit of a smaller market cap at 2.2 billion market cap, but 13 times earnings for this company that does the numbers that it does is just such an unbelievable opportunity. You can see yesterday it did have a 15% pop on this news. It was up like 20% I believe at one point, but it just had this little bit of a pullback towards the end. But even with that pop yesterday, you can see that actually, you know, it's not too far off its 52-week close. And like I said, it's a stock that I've held for around about 2 years-ish now. I did have a really unbelievable average on it, but I have been averaging up on this position, and I am currently up 50% on this position. But like I said just a few minutes ago, I don't think it'll be that long, you know, only a couple of years time before we're back up pushing this $100 range on this business. I think that already the valuation it trades at is absolutely ridiculous, and then when you look at the growth on it, really great growth from this business. So InMode, they brought out preliminary earnings. It normally does, and it's carrying on the trend of bringing preliminary earnings out. It's also worth saying that when they actually do bring the full earnings out, the full earnings also are normally a little bit slightly higher than what these are as well, which is also a positive. The only problem that it kind of puts itself in is that, you know, preliminary earnings are a point of view of the company going, look, this is how good we're doing, you know, we're way ahead of market expectations. The only problem is that sometimes when they come to actually do the proper earnings, they go down slightly. But yeah, I mean, the company just keeps on over delivering on the numbers, which is absolutely amazing. You can see here the Q2 revenue, it's been in the range of 113 million to 113.3 million versus the consensus of 103 million. So that is a massive beat. That's a nearly 10% beat on the revenue. And let's not forget, you know, this is a time where logistic issues that are being hit, or there's a recession, people are going to be spending in the recession, and InMode come and prove all of that wrong. You know, really fantastic results in when you think about this so-called time frame that we're going on at the moment. EPS was still pretty strong, 0.57 to 0.58 compared to the consensus of 0.51. Let's not forget, if we go back to last year, the revenue was 87 million. So you can see this is a massive beat on the revenue from where we're at. They're still putting in really good amounts of growth. Still pushing towards that 30% growth range is absolutely amazing. And on the EPS side of it, still a good beat on the EPS. You know, let's not forget they've had the stock split recently. So when you do go for that stock split and realize what the actual EPS is, the EPS is still very strong on that point of view as well. So really good revenue growth, EPS growth as well, which is absolutely fantastic. And then the triple beat, you know, when you beat EPS, when you beat the revenue, and then on top you come and hike up the outlook as well, that is where you have an amazing thing happen. Almost guaranteed that you're going to have some sort of lift in the share price. In fact, when you have a triple beat like this and you're trading at this sort of valuation and you're this beaten down, you could actually argue that instead of being 15% up on the day, we actually should have had a stock here that was actually up 20 to 30%. If we weren't in the bear market, that could have maybe happened. But yeah, the when you have that triple beat combination, it's a really good thing, and that's what happened. They came out and the revenue outlook was raised from 115 to 125 million to 415 million to 425 million to 425 million to 435 million, and that was gone against the consensus of 416 million, which is great. And what we would actually expect to see from InMode is potentially, once again, a good a preliminary update in Q3 and Q4 if they keep on smashing it. And there's a little bit of a quote here from management basically saying that we're still very strong. Momentum is carrying on into the second half of the year, which is absolutely great. So yeah, fantastic news from the management team here. And like I said, for this company, look at it's ridiculous to see this company. I mean, look at the past performance of this company. Even right now, it's beating what analysts are expecting right here. It's still growing at really good amounts of revenue growth, really good amounts of profit growth. I mean, look at the profit that it's making as well. Like, it's just insane. Like, potentially by the end of this year, we talk about a company that's puts 165 million on that balance sheet, which is amazing. And I mean, just look at the balance sheet itself. Like, there's no debt on there. It's currently hoarding 400 million in cash. Add another, 160 million or whatever onto by the end of the year. We're talking about it's going to be sitting on like 550 million in cash. I mean, the choices they have between either a dividend, which I hope they don't do actually. I prefer them not to do dividend. I prefer them to buy back shares, or they could potentially go and acquire a company somewhere that could maybe add some more profit or revenue in. It's just absolutely fantastic. And while this is all happening, it sits at the lowest valuation that it's ever been at. When you look at total enterprise revenues here, it's in 2019 it was a 3. It's currently 3.49. It actually did sit at a 2 in the peak of the CV situation, so it was actually slightly lower at that point of view, and you got to remember what that situation was like. And also, if you look at total enterprise value to EBITDA, you can see that it's currently was a 10 and it's currently a 7. Same again, the only time it was really that low was kind of that peak CV situation, and in fact it's slightly lower than that CV situation, which is just absolutely insane to think we have a company that's doing these numbers with this balance sheet and this amount of profit, and then it sits at its lowest valuation ever. It's just insane, and I think it's just a golden opportunity. So yeah, I do think that at the moment I probably will wait for InMode to see if it comes down before I do add any more into my position. But the good thing is that during this peak time of fear, what have I been doing? This is one of the stocks that I've been capitalizing on, and one of the ones that is starting to slightly get them rewards. I mean, I won't speak too soon because we never know where the market's going in the short term. But, one of those ones that today just slightly got some of them rewards in. We've seen it with Celsius, that's one that's been slightly bringing the rewards in, even though we've only had just a small rally. You're not even counting in when we have an actual big rally. Hims is another one, so it's exciting times and just a little bit of a glimpse into where we could potentially be. So yeah, just one of those that is financially performing amazing, and even now it's still at crazy valuations, and I'm really looking forward to when this, in my opinion, will touch back at that $100 range in the next few years is absolutely amazing. So just a little update there for you guys that are the InMode shareholders that follow me, because I own it as well. And yeah, a little bit of one of those days where you see that news come out and that share price little pop, and you're like, it's a little bit of that kind of reassurance, a bit of a pat on the back of going, well done if you've been capitalizing on that dip and buying that dip. And I'm sure there's plenty more of them to come as long as the company keeps doing them financial results that it's doing. And the longer it sits down at these kind of valuations, I think we'll have that slingshot up in the right direction very soon. So yeah, I think that without doubt, InMode at these sort of levels is stupid, and I think that anything under 50 is absolutely ridiculous. Like, I think we will have very quickly run back up to 50 at some point, whenever that will be, we'll see. But yeah, obviously that's a bit of a short-term prediction. But yeah, I hope you enjoyed the video anyway, guys. If you could hit the like button, well done to you InMode shareholders, and I'll catch you in a bit.